Hello, trading is closed on March 21st, 2019. Go over our calls. Thursday was a rally day. I thought there was a negative pattern because we couldn't clear these middle of the day highs. I said at the close, I said either we go over them or we're going to drop to significantly lower targets and most likely in a straight line, which we did. Monday's pattern's the one with the early low. Doesn't mean you won't gap up first. During the day, MEJT gave a buy signal, ultimate buy. We got the minimum. We usually get more than this. We don't have to, but getting more than this would give us over 28.3804. We'll just keep it in our minds. We're not saying it'll happen, but if we get a rally, that wouldn't be unheard of. We had an ultimate sell signal in the afternoon. Said this drop was false and wouldn't stick. The rally was false and wouldn't stick, and all those things worked. Well, how about Monday? Monday would be a lot easier call if it weren't for this recovery. This recovery kind of muddies the waters for me. We've got mixed signals. It's positive that the first move after the FOMC announcement was up. Usually it telegraphs how the market's going to move next. We should get three waves. Here's one, then leg number two should be more than this 40 points, which would mean we trade down to about 27.80, and then we should get a third leg up, which would be higher than this. I think this is going to hold, so I don't think we're going to get the normal thing. It would make my life easier if we have a big drop hitting the equivalent of 27.80 in futures and then recover, but just because it would make my life easier doesn't mean that's what's going to happen. Now here's another positive thing is we dropped and dropped all day. And although we did close under all these lows, with 5 minutes left to trade, we could not close under these lows. And the last 5 minutes doesn't always mean very much. The last hour was a big drop. It took right at the end with a wall of selling into the close, which was immediately recovered in futures after the close. This type of move, especially when this holds till right at the end, has a hallmark of capitulation by the amateurs. Let's remember on a Friday, drops like this tend to just keep on dropping. It's unlikely retail customers are going to bid prices up by this much in the middle of the day, and it's unlikely professionals are going to be selling nonstop right when liquidity is drying up. So this is often purchases by professionals and sales by amateurs. And if that's what it is, we're going to gap up Monday over this high, or at least sharply, and then trade over this high. That kind of confuses me because I'd like this high to hold. It's pretty equivalent to the FOMC announcement price until we have more of a leg down. So it's not as clear a picture as I'd like. So we're going to summarize things at the end, but let's just go over where we stand. Here was the count I was using. Last evening, we changed the count. So that's an A and that's a B, and blue A hasn't printed yet. Of course, we don't know what degree these waves are yet. It's just kind of a guess. So here's the new count. We're guessing that's A and B, and we're waiting for a drop down. Now we drop down like this, and a day after hitting a new recovery high, we undercut all these prior lows. It's a sign that this high was rejected. All we need to do is avoid gapping up Monday. If you go under today's close by a tick, that means that's a valid break. But if you don't, if you gap up, this has a chance of being a false move. So if you're a bear and think this is for real, you really want to continue dropping on Monday. This is the long-term chart. We used to have A here. We now have it here. If you go back before the bottom here in 2009, all the way back to 2006, you connect these highs, draw a parallel channel, bring it out to here. You can see how perfectly it nails that low and this high. It's another reason I think this high is the end of the leg. Now this low here had a lot going for it. If you draw your Fibonacci grid, you'll see how this high was right at the 61.8%. And the 50% is right at the MEJT target, so that's a legitimate thing. And as we drop to lower lows, you'll see MACD did not confirm. So MACD doesn't always work, but it's a sign that this new low by a small amount wasn't confirmed by secondary indicators. You can also count 5 legs down and 5 waves down and 3 waves up. So we could just keep dropping, but this doesn't have to be ABC of wave 2. It could be ABC of A of 2, and this could be B, and we could have wave C up. And I see this wall into the close like this. I don't always trust it. When you're dropping like this into a weekend, almost always you're going to get follow through at Monday's open. So almost always you'll keep on dropping. If you gap up Monday instead, it's very unusual and very positive. I would think we'd overtake this high before we're done, and very likely this one. Let's go over a few common sense rules and then we'll summarize everything. I've got well over 1,000 people on my website. A lot of them want to post things, and that's fine. Post all you want. Just follow a few common sense rules. No profanity. I had a few people who would swear all the time. I put up with it for a while. I won't do it anymore. If you swear once, I'll block you from posting. I'll never let you back in. You can disagree with me all you want, but don't call me names. I don't like it. Ridicule isn't fun. We're all on the same team. There were a few times I would nail the call perfectly, and I'd get these emails saying I was always wrong. Well, I used to be on a chat room where we had people who were always wrong, and people would just tell them all the time how wrong they were and how they hated their posts. I thought these posters were just a gift. All I had to do to make money was to listen to what they said and do the exact opposite. It was wonderful. I was very sorry when they were talked out of posting. So if someone thinks I'm always wrong, just do the opposite of what I say and be happy. If you have a different opinion, feel free to express it, but give us the reason. It doesn't do anyone any good if someone says, I think we're going up, I think we're going down, doesn't tell me why. I can get those opinions all the time. I need to learn something from people. I like to learn from people. If you don't want to give the reason, just get your own site. No one's stopping you. And finally, I've had a few people who always post when they win. They never post when they lose. Never post anything but winning trades. And that's not just on my site. That's on some other paid sites too. They'll post all their wins after the fact. Nobody cares after the fact if you made money. If you make money every time, and that's an honest post, tell us ahead of time. We'd like to make money with you. If you want to post your wins, tell us when you get in. Then you can tell us when you get out. You don't want to tell us when you get in. Nobody really cares. Let's summarize Monday's trading plan. Thursday's high is probably the end of the rally which started late last year. Bears need to gap down Monday if this drop is going to decline uninterrupted. It's very vulnerable to gapping up instead before resuming the decline. Ideal for me would be a steep drop in futures, completely recovered by Monday's open. That would be leg 2 of the FOMC whipsaw. It would trap everyone who traded in the overnight session, could lead to a strong rally, which would be leg 3, but I think it's doomed to fail. Just because it would be ideal, it doesn't mean it would happen. After Monday's open, we're going to have information we don't have now. We don't have to risk any money without getting more information. Monday's pattern should have an early low. It doesn't preclude gapping up. And that, my friends, is today's call.